Hello, everybody, and welcome to Commodity Culture, where our goal is to make you a better investor in the commodities space. My name is Jesse Day. Before we dive in, standard disclaimer, nothing here is investment advice. Do your own due diligence. We bring you the information, you do the research. And today's guest is the chairman of US Gold Corp, a US-focused gold and copper exploration and development company. We're going to be discussing the macro side of gold, the untenable US and global debt situation, as well as discussing the company itself. It's Luke Norman. Great to have you on the show.
Thank you very much for having me, Jesse.
Yes, happy to have you here. I want to start off with a broad question, as I often do. Today, we're talking about the gold sector. So tell me, in your view, what are the main themes and trends you're currently watching when it comes to the gold space that you think more investors should be paying attention to?
I think the biggest one, obviously, is interest rates. That's having the largest impact on our sector right now. However, usually higher interest rates is bad for gold, are bad for gold, excuse me. So it's been quite an interesting couple of months, almost a year now of watching this shift into gold. I think there's just so much going on globally, geopolitically. People are looking for a safe haven. This increase in interest rates has led to a dearth of the entire real estate sector throughout all these booming countries like Canada, Australia, New Zealand, into Hong Kong. And I think just the safe haven notion of gold, and even beyond that, people who are in cryptocurrencies recognizing, including one of my friends who's one of the largest crypto miners on the planet, that having some physical gold along with your digital currencies is a really smart idea.
Yeah, completely agree with you there. I want to talk about the price action of gold because it continues to hover around the $2,400, getting close to $2,500 mark, hovering near all-time highs once again. What are your thoughts here? Do you think we're due for a correction? As we speak today, the broad market is also pulling back. A lot of the other sectors in commodities are pulling back, uranium stocks, energy. What are your thoughts on both gold and also the broad market? Where do you think both are headed? What are the catalysts for gold in particular that you think you could push it higher from here?
Well, look, gold is going to head fake us all the way along because we're in a secular bull market in gold. That's my belief. Evidence I can point to. I won't get into it because I'll just make myself look foolish, but I truly believe we're in a secular bull market. Now, ask any cowboy, bulls aren't easy to ride. So you're going to have these massive decays in price, $100, $200 drops. But the trend for gold, to me, is significantly higher. Why? Because relative to inflation, it had not corrected higher and higher. So it's a little bit inelastic, just as the underlying equities relative to the price of gold have not reflected this move at all. So I think gold definitely moving higher. I also am a really big believer in copper. I think, copper is just global demand. The copper was always, people said, as goes China, as goes copper. Well, I think that connection or the disconnection is underway. I think just the demand on copper is getting massive as well. So gold and copper to me are the two most exciting industries to be in. And of course, silver is when gold goes higher, silver booms.
Yeah, absolutely. I want to talk about the gold mining space in just a moment. But first, your thoughts on the S&P, the NASDAQ. A lot of people are looking at the tech stocks, the small handful of them that are driving those markets, as being very overvalued at this point. This seems like a classic bubble, yet you have a chorus on the other side saying this time is different. What are your thoughts when it comes to the broad market? Do you think it's due for a correction, and how dramatic could it be?
Well, I just think those indices are not reflective of the real business going on beyond and below those, trillion-dollar tech companies. I think the sentiment out there within the consumers are heading to very, very low lows. Interest rates, again, the reason you've got a lot of people owning mortgages throughout North America, that whole premise that 30-year mortgages in the US protects them from these interest rate spikes is it's nonsense actually, because people have to buy and sell real estate all the time. It's an asset that's constantly liquid, even though it's considered a liquid asset. So just these shifts that are ongoing, it's showing me that the consumer's really hurting. You're seeing it now. I'm seeing it again in real estate. And look, real estate has been the huge value driver over the last decade plus, especially again in Australia, New Zealand, England, for people feeling more wealthy. And economics is just psychology. That feeling of wealth leads to people wanting to spend money. So I actually feel that we're turning a curve and maybe getting into a potential deflationary cycle, or spiral, which would be catastrophe.
Let's talk about gold equities, because they haven't necessarily followed gold's move the way many had expected them to. Why isn't the gold price translating more strongly into the mining stocks and into a boom across the mining sector in your view?
Capital flows, as you said again, other than the big techs that are out there that sway those indices, anything, if you look into meditech or any of these spaces, energy, everything is hurting from the lack of capital flow into these sectors. And I think aside from the fact that, big money can just invest in tech stocks and get an annualized return, the amount of money that's sitting on the sidelines, and again, which is potentially deflationary, is pretty shocking, pretty eye-opening. But ultimately, I see the difference between the ongoing move, the upside, the bull cycle, and the metals, gold in particular, as you asked to, versus the underlying equities, which are not, trading in the range that they would be relative to the shift in price of gold. I always refer to that as being inelastic, and it is. The returns are there. We're seeing companies now coming out with their reporting on these high, on projects with these high gold prices. Eventually, we're going to see capital flow into these sectors, in particular into the gold miners, and that's going to create a hurry up, catch up to the metals price. So that's inelastic in my mind.
Now, you touched on copper a little bit. Maybe you could expand on that for us, why you're bullish there. Obviously, we hear a lot about the amount of copper demand coming up ahead, how difficult it is to bring a copper mine from discovery all the way up to production, how prohibitive it is, both in terms of time and the amount of capital required to do that. And yet the copper demand projected up ahead just appears to be off the charts. Are those the things you're seeing as well? Is there anything you could add to that in terms of your thesis for why copper is such an attractive opportunity at the moment?
Well, first of all, we'll touch on why copper, and then we'll get into the realities of developing and producing it. So as we all know, again, China's demand on copper is what's driven it over the last 2 decades. Meanwhile, in the US, you've got this whole electrification of the automotive industry that's all the way from building electric cars to obviously transmission of power along the highway grid work to be able to charge these things. We've seen the horror show videos. We've all seen them in news articles on 7 or 8 hour long waits at Tesla charging stations. So all that infrastructure has to be upgraded, and that is so the vehicles themselves and the transmission, the batteries, the whole works require a huge amount of copper. So the demand on copper in the EV side is one thing, but now let's take a look at servers. So, you and I do a Google search. It's a huge amount of energy. Those big server stations, or warehouses require massive amounts of copper, massive amounts of energy, so electricity, transmission. But now we're looking at staring down the barrel of AI. Now, an AI search uses about 10 times the amount of computational energy that is required for a typical Google search. So these new AI warehouses, the demand on copper especially domestically in the US, is just going to be insatiable. And the production can't keep pace because I don't have the chart to show you today. I urge you or any of your viewers to go online and Google search it. But the production of copper is falling and forecast to continue trending down as the demand is just getting higher, higher, and higher over the next decade in particular. So now let's look at, all right, well, how can we fill this demand? Well, Chile, the biggest copper producer, that sources into us or into China. China itself as well is a massive copper producer. Chile's got its own, supply starting to constrict. Meanwhile, we've got Rio. They're trying to advance a huge copper mine down in Arizona, but they're falling into federal bureaucracy. So if you're trying to permit or advance something, anything in North America, and by North America, I mean Canada and the US, not so much Mexico's got its own issues, you're just falling into federal bureaucracies and time delays, which are leading these projects now from discovery to take 10 to 15 years to permit. So unless we can find a way around that, the shortfalls in production are going to continue. So we're going to have to look offshore into Africa and China and what have you for sources of copper. And it's not going to deal nicely with the upshift in pricing.
That was a great summary. I want to talk about debt, not only in the US, but around the world. The US national debt now surpassing $35 trillion, while politicians are trying to tell us the economy is strong, inflation is slowing down. And then we also see other countries. We see Japan with the highest debt to GDP on the planet. Countries like Kenya and Egypt continuing to take on massive loans from the IMF. The list goes on. I wonder what your thoughts are as to where all of this ends and how gold can possibly play a role.
It doesn't end well. 2008 was probably a good opportunity for a cleanse cycle, which would have been a deflation or deflationary cleanse cycle, which, hey, I don't wish deflation on anyone. Ask Japan, they're 30 years into deflation and it's ugly. It really is. House prices there are nominal. They're nothing. It's just the value of whatever materials. Used homes, you don't go in and renovate. They stand empty. So this global debt is a fiat currency issue, right? And the fiat currencies are on steroids and we buy into it. We're forced to. I mean, we need a daily transactional method to purchase things, to be paid, etc. I'm not saying gold ever fills that void. I'm not thinking that one day I'm going to head to the store with a 1/8 ounce of gold to purchase something, but it's a great way to store value against this fiat currency, gone wild. Girls gone wild. The debt just continues. The monetary inflation continues. At some point, the wheels fall off. And we're already starting to see, the US is under pressure now as the global currency. The BRICS are wanting to trade now in different methods, whether it be, they're talking about doing a trading currency that would have metals backing it, primarily gold. I'm extremely debt adverse, and I have been for a number of years. And I could rant on to why. I was born in the very early 70s in New Zealand. We were late to come out of the Great Depression curve. So in the early 70s, it was still post-depression in New Zealand. So I was brought up with this stay away from debt. Meanwhile, the governments that I pay taxes to are just loading us as a population in debt, and it's not going to end well. And again, gold is the only true measure of wealth relative to those fiat currencies. So we've seen federal banks buying massive amounts of gold, and yet the price of gold trades off of promissory notes on gold. It's really all these derivatives of gold. But physical gold, go try and buying it when there's demand, and there is demand right now. Even physical silver, it's challenging. So I know that was a little bit of a stretch on your question about global debt, But yeah, I think ultimately, I'll use the word again, it is going to be catastrophic, not a matter of if, but when.
Well, let's pivot now to discussing US Gold Corp. Let's start off with a 10,000 foot overview of the company. Give us an overview.
Certainly. All right. So first and foremost, we're USAU and we're listed on NASDAQ in the US. That's very unique relative to our peer group. Our peers are generally on the Toronto Stock Exchange, either the senior or the venture, or you're listed in Australia. Those are the two main kind of areas for all the metals and mining companies on the planet. So we listed on NASDAQ. We did so because we wanted access to the US retail investor, who have not showed up yet, by the way. I mean, they're just not in this industry at all yet. But so NASDAQ listed, we only have 10.7 million shares outstanding. We, in 2020, went from being a pure exploration company. That's why, you referred to us as being exploration and development or pre-development. We shifted our focus from exploration in Nevada, where I had a lot of success in the past, to developing a copper gold project just outside of Cheyenne, Wyoming. So the projects in the US give you, relative location. Cheyenne, Wyoming, where in the US is at, an hour and a half due north of Denver, Colorado, along a great highway system. You'd be at our project. So domestic copper and gold, excellent. But in 2020, when we turned our focus onto the CK project, there was a lot of question marks about whether we'd be able to permit it, especially because we are within very close proximity to a state park, almost abutting the state park. Well, fast forward to today, 3.5 years later, and we're a fully permitted copper gold project, bucket ready for production. So, that bodes extremely well for us. But how do we pull that off? I just told you that these projects take 10 to 15 years to permit. Our project sits on state ground in Wyoming, and Wyoming is a resource state. They produce everything from coal, trona, there's uranium, there's a mass amount of oil, even wind as a resource. They've got these big wind banks, etc. So their main income as a state is resources. When we went into this process with them on state ground, meant we we didn't have to deal with any of the federal agencies, including the Army Corps of Engineers, who have say over any waterways in the US. We didn't impact any waterways, so no federal nexus whatsoever. So now we were dealing with the same stringent process as we would be on a federal level. That's environmental, archaeological, community, sound, blasting, all the different things that we had to conduct surveys on, wildlife. But we were dealing with people that were 20 minutes away from our project, whose job is to be the overseers and make sure that we're not having an impact on the environment, etc. And lo and behold, 3.5 years later, we permitted our project. So extremely fortunate, because now we are one of a very few handful of companies that have a fully permitted, bucket-ready North American copper gold asset. And try that for a mouthful.
Yeah, and I've said it many times on the show, Wyoming, one of the greatest mining jurisdictions in the United States, if not the world. Very mining friendly, as you mentioned, heavily dependent on resources. They mine everything there. They're very favorable. The government is very favorable towards it. So that's fantastic.
Well, I'm sorry, Jesse, I'll jump in there for a second, because they're also now becoming a huge hub for data centers. A lot of huge data centers going in, including AI. So Microsoft are in there right now. It's a state to do business in, and it's one that proves that if you can deal with the state and deal with legislature on a state level, you can get business done. If you deal with these feds who on both sides of the government are afraid of their own shadows, you're just in purgatory.
Yes, absolutely. I would love to get some more color on the near-term production potential of your main project, the CK Gold project. It's been permitted. You have a pre-feasibility study. What are the next steps to move the project into production, and what does that timeline look like?
Well, okay, so the main step for production for us now would be to just go ahead and finance. We're updating our pre-feasibility from 2021. It was December of 2021, because after 3 years they become stale or antiquated. So we need to update all the economics around the cost of actually developing this. The cost, by the way, to build this mine on our 2021 study was $222 million. We think that's going to be considerably higher because why? We just discussed it, inflation, and monetary inflation in particular. So the cost of producing has gone up significantly, I'd say from 220 to, let's say, 280. But then look at the underlying metals prices. They've gone up significantly more. So our headline numbers from our 2021 report, if you really want to look at it without having to get too deep into the woods, our all-in sustaining cost, that means everything it's going to cost us from CapEx to the final payments to what it costs per ounce for us to produce, came in at around $800. But we were using a forecast of $1,625 gold and $3.25 copper. So both of those, have increased dramatically more than the inflationary cost of us building out the project. So we think that margin is still there, and that's a really impressive margin because it's a well-located project. But the next step for us is not just racing out of the gates. We have this very tight share structure I mentioned earlier. We're protective of that. We're shareholders. I have my own money in this company. So we are now looking at further optimization of this project. So it's a copper gold project right now, which has really robust economics. But during this during the engineering phase, we also recognized some other real big value add-ons. For example, 35 million tons of waste rock associated with our ore body. That's a highly sought after aggregate source in the area. And aggregates are very hard to come by, especially in neighboring Colorado, where you can't get permits even to dig a hole for aggregates anymore. So we've got, it's $20 a ton rock sitting there, 35 million tons of it. Love to bring those economics in further up into that sort of NPV of our pre-existing project, copper gold project. And then beyond that, the state now, especially the city, the Bureau of Public Utilities, are keenly interested in our finished production pit being used as a water reservoir and being tied into their existing reservoir network in the neighboring park. So all these different things, these optimizations that I'm speaking of, are all massive value adds to us as investors and to the company overall. So I think our next step is, further optimization so we can bring down the cost of that capital. And then also those add-ons give us access to non-traditional sources of capital. Copper is now a critical mineral in the US. The list goes on and on. The green credits associated with this being a pit lake post-production, all these different things gives us a lot of different variables to be able to use to go and raise the capital to build the project.
And you've also got some exploration projects as well. Could you give us some highlights there? What are the plans for the exploration side of things as well?
Certainly. Well, as I mentioned, it was 2020 when we pivoted from exploration over to pre-development. And what does that mean? Well, we had CK sitting in our coffers at the time, the Copper King project in Wyoming. But we were more keenly interested in exploring our massive exploration target or project down in Nevada. Now, to give your listeners scope, Nevada is the largest producing U.S. area on the planet. In fact, it's the largest gold producing area on the planet. The biggest gold mines are there. Heck, our CEO helped build the mother of them all, which is the Gold Strike pit and deposit on the Carlin Trend. So what we were doing leading up to 2020, from 2017 to 2020, is we were looking for the next monster in Nevada. Where we ran into challenge was the capital markets weren't there. They had dried up in around 2015, and people weren't interested in investing in exploration companies. So we still have this, monster. I call it a lottery ticket on probably some of the biggest gold deposits on the planet just sitting there in the form of Keystone. So whether we spin that out and dividend it to our current investor base so that we can go after it as a standalone project when the price of gold continues to move higher, or whether we explore it, under the banner and umbrella of US Gold Corp is yet to be seen. But look out for Keystone. It's right next to the Cortez complex, which is Barrick's now flagship mining operations in Nevada. And that is big dollar territory, multi-billion-dollar territory.
Very exciting. Talk to us about the team behind the company. You've got a very experienced team with a track record of success in the gold sector. Talk to us about that. Maybe start with yourself and your own background in the industry.
Yeah, certainly. So my history dates back to 99, 2000. So, 25 years in this sector. And I took a keen interest in gold in particular because I saw the ending of that internet boom that was going on at the time, the www boom, excuse me. And I thought that there was going to be a huge amount of outflow of capital from tech and into precious metals or into any of those sort of tangible metal investments that were around that were grossly undervalued at the time. So I teamed up with a large broker at Canaccord Capital in Canada here. And we went about funding a myriad of junior mining companies throughout the world through our outreach network in Europe, Canada, and the US. So funded probably 40, 50 different junior mining companies over a 5-year period into 2005. And that's when I recognized that actually the biggest commodity that was missing in this sector was quality management, quality teams. So there was a whole myriad of new companies coming to the table, wanting capital, had great ideas, but horrible at executing. Whether they were too scientifically based, or whether they just were in the show just because there was a lot of ducks quacking and they wanted to be a part of it. It was very evident to me that good management was the hardest commodity to find other than a good gold deposit. So I stepped away. I started a company with a partner of mine called Gold Standard Ventures. We went into one of our exploration assets in Nevada and had a great success there. We took our market cap from $18 million to one point close to $1 billion through some exploration success in Nevada. I told you can exploration in Nevada can be a real lottery ticket. And then I just continued forward from there in exploration, really primarily focused on Nevada. So when we started the company in 2017, as I've already mentioned, Keystone, this remarkable district scale opportunity we have there. In 2020, when I realized it was just the money, the funds were drying up for exploration companies, that's when I thought we better focus in on our pre-development asset, Copper King. So speak about getting good management. I approached George B., who's now our CEO, and I asked him just, hey, look, can you take a look at CK on my behalf, on our behalf? So he brought in a team of his ex-compatriots, and just background on George, but George, 40-year mining veteran for building projects, 16 years with Barrick. He built some of Barrick's biggest gold mines on the planet down in South America. Down in Argentina, Peru area. So he's very well versed in building the biggest mining projects on the planet. I figured he might be a handy guy to take a look at our Wyoming project. So he pared back the layers of the onion and took a look at the deposit and came back to me and said, look, this is going to be a cash cow. I'd love to get involved. How do I get involved? So I said, look, we'll spin the company over to a development company. We will bring you in as the CEO. And that's how we began. So George built his team, which is primarily, we've got few executives on the company. We've got Eric Alexander, our CFO. We've got Kevin Francis, chief geologist. But everyone else for us is consultants. But these are consultants that George has worked with in the industry for 40 years. So we have some of the smartest minds on the planet that have built the biggest gold projects on the planet, kind of taking us through the process here. So we're in very good hands as investors in US gold.
Excellent. Well, let's finish on covering anything we haven't discussed so far that in your mind is important for investors to be aware of when it comes to US Gold Corp.
Well, actually, I'll defer back to what I brought up earlier, which is us now going into optimization phase. We already have this very robust economic deposit sitting in the best jurisdiction in North America. It's bucket ready. We're ready to go. But we don't want to take on a massive amount of dilution. We're still waiting to see capital flows into this sector. So why race out and fund the building of our copper gold mine when it's going to be expensive and onerous to all the equity investors in US Gold Corp? When we can focus our efforts in to now getting some of these other benefits, these add-ons, this massive value of aggregate that's sitting there that is going to be deployed and used. It's sitting there carbon neutral because it's already been mined through the copper gold operations. So there are green credits and carbon credits, I'm sure, associated with that we're exploring right now. And then ultimately, though, that value add that it brings, it could damn near double the net present value of the project currently. So I think working fast and hard towards that as we watch the copper and gold market continue to improve and inflows that I suspect are coming in the coming months, is just going to be all add-on, all benefit to us at US Gold Corp.
Well, I will go ahead and put a link in the description to the US Gold Corp website as well as social media for people who want to follow along with the company. Luke, this has been a fantastic conversation. Really appreciate you coming on and sharing your knowledge with the audience.
I appreciate it, Jesse, and anytime.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.